Hello everyone, I'm Brad and this is Mike Anderson with Reliance Mortgage, and I want to spend a few minutes just talking to Mike about some of the issues that you hear about every day out there in the mortgage business. So Mike, let me give you an example.
Are you ready for a bunch of horror stories?
Yeah, that's what I hear is out there too.
That's what most people feel like after they got a
So-
mortgage loan. They just feel like that. Actually, a lot of people feel like after they get a mortgage loan, they could join the CIA or the FBI without any further checks.
Blood samples.
Oh yeah, it's
well,
they're not there yet, but they're getting there quite rapidly. Let me just tell you.
Let me throw something at you. Let's say I'm a guy that makes $70,000 on my gross income. I have a credit score like 730, 740. I have a couple credit cards, nothing major. They've got $6,000, $7,000 on them. Take me through some of the steps that you would, when you advise somebody like that over. Like, would you just take them straight to this loan and try to put them in a box?
Well, let me ask you this question: how much money are you going to put down?
Well, let's say
and also, what price home are you buying?
$225, and I'd like to stick around 10% down if I can.
Okay, what I would tell you is, and you're not going to hear this from any other mortgage companies, I'm not sure you this. I would tell you to put 10% down. We'll get a 10% second with those kind of credit scores and that kind of income, and avoid mortgage insurance. And
Okay.
what that does for you, it cuts your payment, which is what you're looking for.
Absolutely.
But also, it lets you have a tax write-off that you're not going to get with PMI. It also lets you have build equity in your home quicker because you're actually paying a note down rather than paying just PMI, which is
It's just there.
it's insurance is what it is.
Yeah.
You can't ever recover it, and then it also lets you pay your own tax and insurance. So it's a much better situation for you to put 10% down, or even 5% down to pay off the credit card debt, and
Okay.
and get a 15% second.
So that's one of those, I think you call them like an 80-10-10 or 85.
Well, let me assure you this: why don't you pick up your phone and call 10 mortgage companies and find out if they offer it?
Okay, we
None
should
of
do
them
that.
are going to offer it.
All right, and
They
that seems
just
like
don't
a
do it.
smart plan because, and is there any penalty if I pay off that second lien
No.
quicker? So then
No,
if
and
I pay
that's
that
a-
off quicker, it's even better.
That's another thing. A lot of people will accelerate the second lien note and pay it out over a 4 or 5 year period. And once that's paid off, their first lien payment will drop, or their payment will drop maybe 15-20%.
Yeah.
So it's really a good deal for consumers. And what, I'll tell you the reason mortgage companies don't offer it: they have to get 2 loans approved rather than 1. They also make less money on an 80-15-5 or an 80-10-10 than they do off 1 loan. That's why they don't offer it.
That's Mike Anderson with Reliance Mortgage, and this is Mike's Mortgage Minute.